QuickBooks Pro Plus Desktop 2022 OneNote presentation, bank reconciliation, month number 2, deposits. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 9140, bank reconciliation, month number 2, deposits. Also take a look at the immersive reader tool. Topic introductions also in the text area. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're doing the bank reconciliation for the second month. We have entered 2 months worth of data. Did the bank reconciliation for the first month, which is often more complex due to having that beginning balance problem. We don't have the same beginning balance problem in the second month, so this should be more routine, more easy, and smooth as we move forward from this point. But we do want to see the relationship between the outstanding items in the first month and how they're going to be impacting the second month. So we're starting off with the checking account as of the cutoff date of the bank statement, the end of February in our case. We're going to have a different number on the bank statement as we have on the books, not because we did something wrong, but because we expect to see outstanding items, outstanding checks and deposits, and probably because we're going to have to add some items that are on the bank statement that are not on our books. Here's the mock bank statement. Notice that the beginning balance is the same as the ending balance from last period, and it will be reconciling to the cleared balance as of last period, not the balance in our books on the bank statement, but the cleared balance that we checked everything off for at the beginning. And then we're going to add the additions and the withdrawals, which will get us to the ending cleared balance, and that'll allow us to build the bank reconciliation, which will be the uncleared items. The items that had not cleared last time, we expect them generally to clear this time, meaning outstanding checks and deposits that we wrote before January 31st, which did not clear the bank because the bank didn't know about them, timing difference being the cause. As of that point, we would expect to clear the bank in February in general. So then we're going to go through our bank reconciliation, banking dropdown, bank reconciliation, picking the correct account as of 2/28, the cutoff date for the bank statement, and the beginning balance will be correct. We don't have that beginning balance issue anymore going forward. Ending balance, we're going to be pulling forward from our bank statement. I'm not going to put anything in the service charge and the interest earned for the same reason as last time. I like to do those myself because it kind of messes me up if I add them there. And so we go in, and now we're just going to look at the deposits first. We're just going to be ticking and tying off, remembering the general rule. If it's on the bank statement, then we expect that it should be on our books. So we're going to go from the bank statement to the books. Now, if it's on the bank statement and not on our books, bank statement, but not in our books, we're then going to fix our books, adding them to our books unless we think the bank is wrong, which isn't generally the case. It's generally the bank is right. We need to fix our books. If it's on the books, but not on the bank statement, then we expect that to happen to some degree with regards to the outstanding checks and deposits. This is why when you think of ticking and tying these things off, it's easier to keep in your mind that you're ticking and tying from the bank statement to the books. So we're going to tick and tie everything off. Remember the same thing with the deposits. You're really reliant on just the date, which should be pretty close to what we enter, although it could be a little bit different because of the timing difference, and the amount, which should be exactly on. And if it's not, it's probably because we're not using that undeposited funds clearing account well in order to enter our detail into our system in the same format as it is going to be shown on the bank statement. And we need to get better at our data input process to make the bank reconciliation an easy thing to do. So we're just going to tick and tie them all off, and then we got them tied out here. We've got 2 items on our books that aren't on the bank statement. We expect that to happen because those are things that we entered that haven't cleared the bank yet. We can verify that those are legitimate transactions by seeing if they cleared the bank in the following month, in this case, March. If they did, that's great. I'm not worried about those 2 transactions. Those are just the reconciling transactions then that will be the process or in the bank reconciliation report that will be reconciling our balance to the bank balance or the bank balance to our balance, giving us the difference between the bank balance and our balance in essence when we generate the report at the end when we go through the reconciliation process.